Guess what chart this is? Could it be the loss in purchasing power of the US dollar over the last century? Could it be the stock markets? Could it be silver? It's actually the Aussie dollar. It has crashed against the US dollar by more than 8%, and this is in a 24-hour period. We're going to come back to this later, but the craziness of national fiat currencies is really starting to show. So getting into the markets, gold is still noodling up and down above and below 1,500. Silver is down near the $12 area. Gold-silver ratio remains very high. Bank of America says recession is here. No kidding. Recessions are a lagging indicator. It takes 2 quarters of economic contraction for the Federal Reserve to declare a recession, and then they need about a month to compile it. So you don't find out that a recession started until about 7 months or 8 months after it started. And we had declining retail sales in February, and then in March, sales have dropped off a cliff for all except for toilet paper and a few other absolute essentials that people are doing all of this panic buying over. As America goes nuclear, meaning we're printing, the EU is the greatest threat to the global financial system. And it's because of all these different countries that can't agree on things. So anyway, why trillion-dollar coronavirus bailouts will shackle the U.S. economy. That's about zombifying the economy. Bank of England's Bailey to print unlimited money. Well, first of all, it's not money, it's currency. Only gold and silver are money. And if you watched episode 1 of Hidden Secrets of Money, you know that. But money has to be a store of value. And these currencies, as the Aussie dollar just proved, do not. They don't store value. An ounce of gold has a relative purchasing power that it bounces up and down in a range, but it purchased this relatively the same amount of stuff back in the ancient Roman times as it does right now. And the purchasing power is going to go way to the top of that range and possibly overshoot anything in history. That's what I think it's going to do. Elleran warns twin deleveraging could spark global depression. I don't think it'll even take twin deleveraging, but you'd have to read that article to see what he's talking about. But yes, global depression, I think, is a very high likelihood. Global central banks deploy trillions to keep economy running. The helicopter drops have started. On the radar, very first thing, Brent Johnson of Santiago Capital, he's the guy that came up with something called the dollar milkshake theory. And it's worth watching a video on that. Basically, anybody globally that owes debt that is denominated or has a trade that they have to close out that is denominated in US dollars, which is a big, huge market, they have to acquire those dollars to close out that trade or pay that debt. And it creates artificial demand. And that's one of the things that you're seeing right now. And the dollar is going up, so the Australian dollar sinks. So when I first said the Australian dollar would go to 40, people told me I was crazy. We're halfway there. And what you see here is that just since the beginning of the year, the Aussie dollar has lost 21%. Now, if you're running an import-export business and you're in Australia and you're importing goods from America, import-export businesses, these are wholesale businesses. So they run on thin margins, 5%, 10%, maybe 20%. But it's not 33 up to 100% like a retail business might be. And so a loss of 20% in a year, if you're only making a 10% profit margin, how do you cope with that? I mean, you have to send out new price sheets. I mean, just today, they have to either stop their sales or send out new price sheets to everybody right now. These national fiat currencies backed by nothing. It's a crazy system. When we had national fiat currencies that were pegged to gold, exchange rates were stable, and there was no such thing as the Forex. You didn't have these bouncing up and down exchange rates. And so an investor, somebody could start a business and make much more accurate predictions about what their profitability might be and what the future viability might be of importing or exporting from this country or that country. So I think 100 years from now, we're going to look back into history at today, and we're going to say, what were we thinking? So I want to welcome the 1,231 new subscribers. Thank you very much. And anybody else subscribing, please click that notification bell once you've subscribed. The chart of the day is actually going to be some data of the day, and I'm going to show you some stuff from the St. Louis Federal Reserve's their economic research and data divisions of the Federal Reserve System. And if you type in Fred, F-R-E-D, St. Louis, Fed, STLOUISFED.org, and then do /categories, you'll come to this page where they've sorted the more than 72,000 databases that they have here that you can choose from into categories that make it very easy to find what you're looking for. But what really worries me here, if you type discontinued into the search field, you're going to find that they've discontinued 36,198 items. Now, a lot of these items I don't care that much about, but what worries me about this is that there's more than 400 of them discontinued in the last year, and you can see that by sorting by observation end, so that's the end date, and you get the latest ones that they've discontinued, and you see there's a number here in February. Some of these I care about, some of them I don't care about at all. If they're ones that only existed for a couple of years, then they really don't make any difference. But if it's something that is a very important data set that goes back for a very long period of time, then it's really disconcerting to see them doing this, because it has to make me wonder, are they going to start concealing stuff in the future? So far, the Federal Reserve, especially the St. Louis Fed here, they've been extremely transparent with all of their measuring of the economy, and they've disclosed everything. But here are data sets of the monetary base that go back to 1918. And when you click on these, you get the chart going back to 1918, and down below, you'll see that they've ceased producing this data series, and it's going to be replaced by this data series, which is the exact same thing, but now it only goes back to 1959. So if you want today's data, you have to, and you want that historical context going back years and years ago, then you have to download both data sets and splice them together. And the reason that you want this is so that you can show things in a historic context. There's some very important things here. This is a chart of, this is the base currency, and it was measured in billions back then. Right now we've got 3.5 trillion roughly, and back in 1918 there was 4.8 billion. I'm just amazed when I see all of this. But here's an interesting part that nobody has talked about yet. This is the Spanish flu pandemic of 1918 and 1919, the two waves of the Spanish flu pandemic, and they were inflating the currency supply back then, the Federal Reserve was. And then you get to 1920, and there was a really bad, short-lived depression, and I was the first one to call it a depression back in 2006. I'd be speaking at a conference, and I'd raise my hand and say, has anybody here heard of the Depression of 1921? And the entire audience would raise their hand. And then I would say 1921, and everybody would put down their hands. Nobody had heard of it. And this was in audiences as large as 30,000 people that I was speaking to back then. Then about 3 years ago or so, Jim Grant wrote a book called The Forgotten Depression, and it's about this depression where the government and the Federal Reserve did not rush in to save us. And within just a couple of years, everybody had forgotten about it, and we went into the roaring 20s. Now, this is the monetary deflation that happened during the Great Depression. That's it. compared to this huge deflation of the currency supply. And wholesale prices also deflated. It was the greatest deflation in U.S. history. So it's worth, I'm going to try to figure out what connection that has to the Spanish flu. Right after the Spanish flu pandemics, this enormous slowdown in the economy and huge deflation. So up next is Behind the Scenes. And here I want to show you how long I've been doing this. This is the first recorded presentation that I gave back in 2005. I was speaking up at the Silver Summit. And a decade later, I was speaking at the Silver Summit again. And I used to have like a couple hundred ties. I don't know how many hundreds. But the tie that I was wearing in 2005, I brought it along. It's like a souvenir. I think I kept it still because of this. I got rid of most of my ties when I moved to Puerto Rico. But back then, Shauna and David Bond, and I can't remember Shauna's last name, they ran the Silver Summit, and she used to call me the tie guy. But one of the reasons I show you this is to show you how long that we have been doing this and how we have stuck with it every day, year after year, and even when things got really tough. And believe me, there were some times in this business that have been very, very tough. Now, there's going to be a whole bunch of Johnny-come-latelys that step on board very soon, and there's going to be a lot of scam artists out there. So be careful who you're following and who you're paying attention to, because there's always somebody that's got this hot information or was right about this last thing that pops up, and a lot of them are pump and dumpers or they've got some other scam going on. So just be careful. Viewer feedback. And this is about the helicopter drops, the biggest monetary bailouts in history, the last video that I made. Made Up Name says, I'm not waiting on the government. I just bought my own printing press, and hopefully by tomorrow I'll be printing $10,000 bills for everyone. Does anyone know how to put ink in one of these things? Well, I suggest you contact Jerome Powell of the Federal Reserve. Magali Morand, I'm sorry if I'm mispronouncing your name. Magali, I'm dyslexic. And so when people see me, I rehearse these things and I read these things 3 or 4 times before I read them to you, and I still make mistakes. So I apologize. Hi, Mike, and thank you for sharing everything you have discovered and know with us. I'm in the process of reading your book, and I've only found your channel 2 weeks ago. My husband and I are starting to purchase gold and silver again this week, thanks to you. We have a question for you about the future world we will eventually step into. What kind of jobs/sectors do you believe will be useful and possibly profitable after the collapse? We're trying to prepare. Thanks again so much for your valuable insights. Well, this is sort of a 2-stage thing, because there's the jobs that will do well during the collapse and shortly thereafter, and then there is a whole bunch of opportunities somewhere near the bottom. The types of jobs that are good in the collapse and in the coming depression are the ones of things that people need. And so you want to, when you're talking about the grocery sector and farming and all of those things, whatever people need, even energy they need, but with oil down at $20 a barrel today, I mean, the deflation that's happening in the commodities sector, oil down to $20. By the way, I did predict $20 oil, possibly even 10. I was speaking at the Russian banking conference, I think in 2012 or 13. But do you believe, so that will be good. But if you remember, in this video, I showed a chart of the dividend yields of stocks, the dividend yields of the S&P 500 stocks. And the average in 1932 was 14% for anybody that wasn't scared enough, that had some capital set aside. If you had gold, you did really well. And you traded that gold for stocks at that point in time. You would have been getting 14% annual return as dividend yields, interest, plus the capital gain that you get on it. So there are huge there's also going to be business sectors that collapse entirely. And if the economy recovers, anything even like a restaurant, if you can establish a restaurant when 80, 90% of them have gone out of business, and I think that's where we're going in Puerto Rico, all of the restaurants are closed. And so I think when this thing's over with, 80% of them are going to be gone. Jerome Johnson, hello, Mike. You mentioned in a previous video about how 500 ounces of silver could one day buy a median price home. Do you still stand by that, or do you think it will take fewer ounces to buy the median priced home? Yes, I think it'll take fewer than 500 because of what we're going through. Back in 1980, it took 500 ounces roughly to buy a single-family median price home. I think it's going to take a lot fewer this time, simply because of the scale of the bubbles and the fact that we had bubbles in stocks, real estate, and bonds, and the fact that they're all bursting simultaneously due to coronavirus. The pin that is more like taking a shotgun to the economy. Yes, it will. You're going to see gold and silver soar, and you're going to see home prices come down pretty dramatically. Meme of the day. But first, get a free copy of my book. It only takes like 30 seconds, and you'll be able to be reading it. And ever since my book came out 12 years ago, almost every question that I get was answered in this book. And I'm still answering those same questions today. It's all here. So go to our website, goldsilver.com, download that for free. So, the meme of the day. We just create worthless electronic money out of nothing. Then we lend it out and charge interest on it. Then we make them give us their houses and their real wealth when they cannot pay. And that is so true. That's the way our monetary system is engineered, and it is a sad fact. I hope you enjoyed this video. We'll see you next time. Thanks for listening.